Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 50 on February 23rd, 2019. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Knight-Swift Transportation, Bank of America, and ON Semiconductor Corporation. And then we'll discuss three new trades on GoPro, MetLife, and Micron Technology. Now, it's always great to hear from listeners, so if you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can reach me at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know in order to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or just visit the YouTube channel for the Weekly Option. Now, the equity markets were slightly up this week. Both major indexes in the U.S. grew roughly half of a percentage point, which is closer to unchanged for the week. The Dow Jones Industrial Average grew 148 points, ending the week at 26,031 points, and the S&P 500 index ended higher 17 points, finishing at 2,792 points. Now this week there are 699, basically 700 publicly traded companies in the U.S. announcing earnings. Here are a few of the companies I'll keep an eye on this week. On Monday, we'll hear from Mosaic, Dillard, and Tenet Healthcare. On Tuesday, we'll hear from Home Depot, AutoZone, and Toll Brothers. On Wednesday, Campbell Soup, Lowe's companies, and Fitbit will announce quarterly earnings. On Thursday, we'll hear from CenterPoint Energy, PG&E, NRG Energy, Dell Computers, and VMware. They'll all announce quarterly earnings. And then on Friday, I'll just take a look at Foot Locker's earnings. And as you guys know, I cover that every week, oftentimes to give me a heads up on which companies might be extremely volatile. So, look a little deeper before I hop into an option trade that might actually blow up on me. And then number two, it also gives me a good reference point to see how their prices do, how their stock charts look after earnings, and help me in looking for trades for the upcoming week or the weeks to come. Now, the topic of the week that I'm looking at or wanted to discuss is forcing the trades. The subtitle, if you will, is learning to be patient. So I spent years trading professionally for companies. I had, as many of you know, 5 years on the floor of the CBOE as a market maker where, day in, day out, you are pricing trades and quoting trades out loud basically for 8 hours straight. Well, it's never straight trading, but, you're there all day to make markets. And then I spent 10 years as an energy trader down in Houston, trading both physical and financial energy. So moving physical product, trucks, trains, selling product by ship, even sending it to other countries out of the Houston ports. And we would always take on financial hedges, so trading futures and options against that. And one thing I can tell you is that when you're working for trading companies, there is always a pressure to be in the market. They don't pay you to come in and analyze all day. They really want you making trades often. And the good thing about that is that you get used to making decisions and learning how to navigate challenging markets, because the market gives you something new every day. The bad thing is that sometimes you really don't have a trade. There's nothing to trade. And so years ago, I remember hearing this and kind of kept it close. And it's, if there's nothing to trade, trade nothing. There's a lot of danger in forcing trades just for the sake of trading, right? So maybe you're new to trading and you just can't, you're so excited to execute your first trade order and see how it all works. I just say make sure you hold back. And this This ties back to me saying, plan the trade and trade the plan. Make sure the numbers work out in your favor. Make sure that you understand the risk that you're taking on. Make sure that it's the type of market that you trade well in. I learned years ago that I trade well in trending markets. When markets are going sideways, that's where I tend to force trades. And so, I'll buy too soon, sell too early. It has to do with my own personality and my way of looking at the market. All of us can look at the same sort of trading rules and we'll still execute it differently because our personalities are different. So you have to learn what works for you, learn what your personality type really can handle, and make sure you're not trading for the sake of trading and you're not trading for excitement. Like, seriously, if you want excitement, go to the movies, hop onto YouTube, do something other than risk your capital, right? It's not just money that you're trading, it's capital. And capital, the difference being money flows, money can be spent, but capital is meant to build your future, really truly build your nest egg. So wait for the metrics to look good before making a trade. Remember, plan the trade and trade the plan. So that's it. We'll go ahead and dive into the review of last week's trades. And with the market being the general market being slightly unchanged, we're going to see a lot of that effect in the results for this week's trade. So we'll start off with the covered call. We looked at Knight-Swift Transportation, symbol KNX, Kevin Nancy X-ray. At the time, the stock was trading for $33.53, and we looked at selling the March 35 call at $1.10, hoping to lock in a 7.66% return over the next 4 weeks. Well, Knight-Swift Transportation finished the week at $33.60, a 7 cents increase over the week. The March 35 call, which we sold last week, can actually be bought back for $1. So that would leave us with a profit of 10 cents on the call option and 7 cents on the stock itself if we were to close the trade today, adding up to a 17-cent per share profit for the week. Now, it's always nice to make a little money, and that is exactly what we have at the moment, is just a little bit of money. We aren't anywhere near the break-even point on this trade, so it's fine to consider staying in this and tracking the stock in the coming weeks. We still have a shot at that, ending up locking in a 7% return in the next 3 weeks. Now, our credit spread last week we looked at was on Bank of America, symbol BAC, Brian Apple Charlie. At the time, the stock was trading for $29.11. And I looked at selling the March 29-28 put spread for 34 cents, which leaves us with a maximum loss of 66 cents that's possible. Well, Bank of America stock ended the week at $29.08, $29.08, and that's a 3-cent decrease from last week. So the put spread, which we sold, really hasn't moved much at all. If we were to close the trade right now, we would lock in a 2-cent loss. And we still aren't even close to the break-even point on this, so I would lean towards hanging on to this credit spread for another week and just see how the market reacts. If it's not doing anything and you'd rather deploy capital in another direction, totally fine to close the trade out. And if it moves against you, obviously you can make additional decisions. But I think this trade still has a lot of possibility, and the next few days of price data should give us a little bit more clarity around the direction the stock price is going to head. Now, our final trade from last week is a debit spread. We looked at ON Semiconductor Corporation. The stock symbol is ON, Oscar Nancy. At the time, the stock was $22.97. We looked at buying the March 22-23 call spread and paying 65 cents, which leaves us with a maximum gain of 35 cents, or roughly 54% possible return in 4 weeks. Well, ON Semiconductor stock fell 13 cents this week, closing at $22.84 on Friday. Now, that's not the direction we want the stock to head since we own the March 22-23 call spread. And if you decided to close the trade right now, you would actually lock in a 15-cent loss. Of course, if you were to add to the trade this week, it will cost you 5 cents more than it did last week. So that means we're in the middle ground of the spread, and that the stock still looks optimistic to me. So I'm going to wait for more information, similar to the other trades this week, and that's kind of what happens when you have a week with very little market movement, and there are no clear wins and no clear losses. It's more just wait and let the market tell you which direction it's going to go and how you should react. Now, just as a reminder, we are 3 weeks away from March expiration, so this tends to be a good week to find some trades. It's tough when we're 4 weeks out because you still have the 50-cent strikes typically haven't been priced before Monday, and I obviously record the show over the weekend. But now we have more information, we have more strikes to look at, and so let's dive in. So the covered call we're going to look at is on GoPro, symbol GPRO, George, Paul, Robert, Oscar. The stock ended the week at $6.21, and I'm looking at doing a covered call, so buying that stock and selling the March 650 call at 13 cents. Now, this creates a possible return of 6.76% in 3 weeks. Now, you enter this trade by buying GoPro stock at $6.21 and then selling the March 6.5 call at 13 cents. This trade makes the most money if stock prices finish above $6.50. And GoPro, if you remember, a few weeks ago, GoPro actually announced earnings, so it should just be sort of trending in the direction, and we'll take a look at and see how it does next week. Now, the credit spread I'm looking at this week is on MetLife, symbol MET, Mary Edward Thomas. Stock ended the week at $44.74, and I'm looking at selling the March 45 half call spread at 15 cents, and that obviously leaves us with a maximum loss of 35 cents if it goes against us. Now, you enter this trade by selling the March 45 call at 75 cents and then buying at the same time the March 45 half call for 60 cents. This is a credit spread because we are selling the spread. We're selling the more in the money or closer to the money call. And this trade makes the most money if stock prices stay below $45 per share. So this is definitely a bearish trade. And then our final trade for this week is a debit spread on Micron Technology, symbol MU, Mary Uncle. Stock ended the week at $42.57, and I'm looking at buying the March 42 half call spread, paying 34 cents for this 50-cent spread. So that leaves us with a maximum possible gain of 16 cents, or roughly 47% on your capital in 3 weeks. Now, you enter this trade by buying the March 42 call for $2 and then selling the March 42 half call at $1.66. This is a debit spread because we are buying the spread, meaning we are buying the closer to the money call. And this trade makes the most money if stock prices stay above $42 per share. All right, well, that is it for this week's show. Thank you guys so much for listening and following along. I hope to hear from more listeners this week. We had a few emails this past week, so it's always a blast. And I really am available for answering questions or just talking shop. I love talking about options, and that's why I have this show. So definitely do the research this week to see if any of these trades work for you, and go out there and make some money. Happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.